Hello everyone. This is Boostock YouTube channel. Today, I'd like to walk you through Apple's income statement over the last 3 fiscal years. Let's start with the revenue graph. There are two key takeaways from this data. First, is the consistent upward trend. Despite global economic fluctuations, Apple has maintained uninterrupted growth for 3 consecutive years. Second, notice the acceleration in growth. The jump from 2024 to 2025, roughly a 6.4% increase, is significantly larger than the growth seen in the previous period. This suggests that Apple's strategic expansions, likely in services or new hardware categories, are yielding high returns. Now, let's take a closer look at Apple's revenue growth on a year-over-year basis. While the previous chart showed total revenue, this graph highlights the momentum of that growth from 2023 to 2025. First, looking at 2023, you'll notice a negative growth rate of -2.8%. This indicates a period of slight contraction, likely due to challenging market conditions or supply chain headwinds at the time. However, 2024 marked a significant turning point. The company successfully bounced back into positive territory with a 2.02% growth rate, showing signs of a steady recovery. The real highlight is in 2025. The growth rate accelerated sharply to 6.43%. This is more than triple the growth rate of the previous year, suggesting that Apple's new product cycles or service expansions have been highly effective in driving market demand. Moving on, let's analyze Apple's gross profit performance for the same period. This chart is crucial as it reveals how efficiently the company is generating profit after accounting for the direct costs of its goods and services. What's impressive here is the consistent margin expansion. The steady rise in gross profit indicates that Apple is successfully balancing its production costs while maintaining high demand for its premium offerings. This growth suggests that the company's shift toward high-margin services and optimized hardware manufacturing is paying off significantly. Let's look at the bottom line of our operational performance: operating income. This chart reflects Apple's ability to generate profit from its core business operations after accounting for all operating expenses, including R&D and SG&A. This steady growth in operating income is a testament to Apple's operational excellence. It proves that while the company is scaling its revenue, it is also maintaining strict discipline over its operating costs. Even with significant investments in future technologies, the business remains incredibly lean and highly profitable. Next, let's examine Apple's pre-tax income. This represents the company's total earnings after adding non-operating income and subtracting non-operating expenses. A key point to notice here is the stability of our non-operating performance. The fact that pre-tax income remains very close to our operating income suggests that Apple is effectively managing its debt and financial assets. This level of financial health provides the company with a significant cushion and the liquidity needed for strategic future investments. Next, let's look at one of the most critical indicators of our financial efficiency: the gross margin. Essentially, we are seeing nearly a 3 percentage point increase in profitability over just 2 years. What drives this margin expansion? It reflects Apple's incredibly strong pricing power and a favorable product mix. As we shift more toward high-margin services and premium hardware tiers, we are able to keep a larger portion of every dollar earned. Maintaining a gross margin near 47% is a remarkable achievement for a company of this scale, proving our high-value business model is working. Next, let's examine our selling, general and administrative expenses, commonly referred to as SG&A. A key takeaway here is Apple's operational discipline. Although our sales have surged significantly, the growth in SG&A has remained relatively moderate. This indicates that we are successfully leveraging economies of scale. We are selling more and expanding our global reach without letting our administrative overhead spin out of control. Next, let's look at a key metric for operational efficiency: the SG&A to gross profit ratio. This chart shows what percentage of our gross profit is being spent on selling, general, and administrative expenses. Apple is achieving significant operating leverage. Even as we grow our total profit, we are spending a smaller or stable proportion on administration and marketing. This demonstrates that our corporate infrastructure is becoming more efficient as we scale, allowing more of our gross profit to flow directly into our operating income. Next, let's take a look at Apple's interest expense over the last 3 fiscal years. In 2024, we saw a noticeable jump to $20,879 million. This increase was likely driven by the higher interest rate environment or strategic debt financing during that period. However, moving into 2025, the expense decreased slightly to $20,329 million, indicating that our debt costs are beginning to stabilize. When compared to our total revenue of over $400 billion, the interest expense remains a relatively small fraction. This shows that despite the fluctuations in borrowing costs, Apple maintains an incredibly strong interest coverage ratio. Our ability to service this debt while continuing to grow our profits highlights the company's superior financial resilience. Let's evaluate Apple's debt service capacity through the interest expense to operating income ratio. This metric tells us how much of our operating profit is consumed by interest obligations. The most notable takeaway is the sharp decline in 2025 to 0.12. This is the lowest level in the 3-year period, representing a significant improvement in our financial margin. This downward trend in 2025 is particularly impressive. It demonstrates that our operating profit is outgrowing our debt costs at an accelerating pace. Even in a fluctuating interest rate environment, Apple has managed to reduce its relative debt burden, ensuring that a vast majority of its operating income remains available for reinvestment, dividends, and share buybacks. Finally, let's look at our dividends per share for the 2023 to 2025 period. This chart is a direct reflection of Apple's commitment to returning value to our shareholders. We have maintained a steady and predictable growth rate in our payouts over these 3 years. This consistent increase in dividends, alongside our record-breaking profitability, highlights Apple's strong financial position. By breaking the $1 per share mark in 2025, the company is sending a clear signal to the market about its confidence in sustained cash flow. After a comprehensive review of Apple's financial statements from 2023 to 2025, I would like to conclude with a summary of the company's overall valuation and strategic outlook. First, Apple has demonstrated incredible resilience. We saw a transition from a slight contraction in 2023 to a robust 6.4% revenue growth in 2025. This V-shaped recovery proves that Apple's core product demand and service ecosystem are stronger than ever. Second, the quality of this growth is exceptional. Our gross margin improved to nearly 47%, and our operating income reached $133 billion. This was achieved through disciplined cost management, where we kept our SG&A expenses stable while scaling our business. Apple is becoming more profitable as it grows larger. Finally, the financial health of the company is rock solid. Despite a fluctuating interest rate environment, our interest to operating income ratio dropped to a 3-year low of 12%. This stability allows us to consistently increase shareholder value, as seen in our dividends per share rising to $1.02.